I made $29,629 on this trade. I'm going to show you what I did to make this profit. So come over to my screen right now. This is how you make a profit on this trade. Now, this is Beazer. Beazer is a home builder, and it's a company that I love to trade. I love to frequently trade them. Why? Because they typically will give me nice long runs through the sweet spot, both up and down. And you can see here, and this was an interesting one because we had to pay attention to earnings. So this trade, I was watching this, I'm always watching this, as it was coming down like this. These are my two entries. This is my entry point. This is my exit point. I wanted to note it on here before we got going at all. Now, if we just get rid of these whiskers, you can see not much was happening with Beazer leading into earnings. Yeah, it had a little bit of a creep. We got this sweet spot reversal. The stock started running, and then earnings happened. And what happened when earnings happened? Remember, I don't like to trade stocks during earnings. Why? They could jump up, they could jump down, and it doesn't really matter what the earnings per share were, what the revenue was for the quarter, what the profit was. It can go with what the market anticipates or what the market thinks that the direction of the stock should go. So let's say something like they had a great quarter, but the forward guidance is a little lower than expectation. This thing could drop 15%. You see it every single day. So for me, I don't like trading earnings. I let earnings get out of the way. This was this big run that happened here. They had a nice 24% pop. Then the next day, dropped 9%. Total crapshoot. The following day, dropped 3%. Then we started to steady out. And as we steadied out, our trend didn't change. Notice here, the trend after that sweet spot reversal, we kept creeping up. Great. Everything's going well. Now, I wanted to enter right in here. I wanted a nice engulfing candlestick. So let's clear this out. I'm going to zoom in and show you where I entered. So I entered right here. Why? It was engulfing the previous day. And I don't typically enter trades that are not in the sweet spot, but because this had momentum on its side, because I know that this had good volume, buying volume on its side, I decided to enter it as it was in the overbought area. Now, what were my expectations? Well, I read this one correctly. My expectation was that we were going to stay in the overbought area for quite some time. Now, did I think it was going to go through the next earnings date? No, I didn't. That was very fortunate for me with the trade. But if you do this on a repetitive basis, if you buy stocks that are making 52-week highs, even if they're in the overbought area, that's a power stock. It's over all of its four major moving averages. The idea is that it's just going to keep going higher and higher. So as this goes sideways in the overbought area, as you are over those four major moving averages, what does the stock price typically do? Well, the stock price typically goes up like this. Are you going to get pullbacks? 100%. You're always going to get pullbacks. Stocks don't just go straight up. But overall, this is going to be the trajectory. And that's the beauty of the weekly chart. That's the beauty of the long-term stochastic. You don't care about the day-to-day. You don't care about the ups and the downs and the ups and the downs. No, the big ups, the pullbacks. All you don't care about this squiggly line in here. You care about the overall trajectory. And as long as the trend is telling you to stay in that stock, you stay in that stock. Now, how did we run with this? And this is another question that I often get. Let's pull in emotion here. So you enter here. Okay. We enter in the price that I entered. Let's see here. $21.60, right? You enter. Okay. Now, next day, you're losing money. You're losing more money. Oh no, the trade is over. I'm worried. I'm down from 21.60 and it's coming down. And now the low of the day was 20.27. What do I do? Do I exit the trade? No, don't just go. This is what I say often. Don't go based off of price action. Have something else there. You have the trend. The trend didn't tell you to even pay attention to it. The trend just said, leave it alone. You're in the overbought area. You're not, if this thing started turning down like this and dropped below the red 80% line, yeah, you're exiting the trade. But if it's not, this is just nothing but a snapback. What happened the following days? It went right back up. Then it did it again, came even lower. What did the trend say? Still in the overbought area. No reason to exit. The exit would have been dropping below 80%. That didn't happen. All this was doing was creating a consolidation channel. And then all of a sudden, it started to move out. Another consolidation channel started to move out. Should you be exiting when you get these big moves up? Well, no. Remember, as this continues to go sideways, the stock price continues to climb higher. The only time that I looked for an exit in this trade, and unfortunately, I had to look for an exit in this trade. Why? Because it was basically 3 months. It was coming down to earnings. Remember, going back to the beginning of the video, I don't trade earnings. Now, this earnings report, the stock price jumped up 27%. Does that suck? 100% it sucks. But there's more times than not, this is going to gap down here, and it wouldn't suck. I would be a very happy camper. But in this case, I ended up making my exit right here, July 26th, exited at $28. This was a 29% move. A 29% move between May and July. That's pretty good. And really, there was no stress on this trade. As soon as I was in, there was no reason to exit. Remember, the only time, actually, you know what? Let's do something here. Let's pretend that this wasn't earnings, okay? Let's pretend that I stayed in this. Let's pretend that it moved up here. Okay. Then this started to pull back. Then this started to pull back. Where would my exit be? My exit would be right here. If we didn't have earnings, my exit would have been here. So it would have been about the same number, but the guideline is dropping below 80%. The stochastic tells you when to exit. That's the point in me telling you this. The stochastic tells you when to exit. Earnings also tell you when to exit or reduce your shares. For me, it was a reduction of shares. And that is how you go about trading on the long-term chart. There is not a lot to do here. All you have to do each day is log into your account. And this is perfect for the person that maybe works, has a bunch of kids. You don't have time to sit on a chart all the time. All you need is 2 minutes a day. Log in, say, is my stochastic changing? No. Is my stochastic changing? No. Eventually, am I paying attention to earnings? Yes. Earnings are coming up. I need to exit the stock before the close of the day, before the open of the day, the next day, whenever the earnings report is. That determines what you need to do. So if you're the working person, literally all you need is 2 minutes a day to check this chart and make sure things are going as planned and not changing a direction where you don't have earnings. You may be looking at this saying, well, I don't know how to do that. How do you learn this? Join my Patreon. Guys, if you join the Patreon, if you go through the videos, if you come to my live streams that I do multiple times a week, you will be able to do this. It really is not that hard. You will be able to put yourself in a good position to make money on a consistent basis. The biggest thing about this is pattern recognition. You're not going to be able to see this trade on day one, but if you practice and you watch the videos and you talk to other people in the community and you attend the live streams, you will understand, you will see these patterns like it's like taking candy from a baby. It genuinely is like taking candy from a baby. A lot of people will probably watch this and say, oh, it can't be that easy. It is absolutely that easy. There's not that many indicators. This is what you do for long-term trading. Swing trading, we're adding in some moving averages and some volume. That's really all there is to it. It is a consistent pattern recognition practice that will put you in a really good spot to make money on a consistent basis. Click that link in the description below and we will get you started on the right path and you'll be able to attend my next live stream. Now, I made a video with everything that you need to know about my method of trading. It's in this video right here. Click it, go enjoy. Have a great day.